EA stock went up because they announced a major stock buyback. If you don't know what a stock buyback is, I'll try and explain it briefly in layman's terms here in just a minute, but the second thing I do want to address right off the top is I apologize for the title. I personally do not think that Mass Effect is on a quote-unquote hiatus, but that's how everyone is referring to the recent news that's been out, so I just wanted to reference it in a way that would register with people. But let's go ahead and get down to business. Hello and welcome to the Exalted March, where we talk about Dragon Age, Mass Effect, and Bioware games in general. I want to go over what a stock buyback is. That's essentially, in my estimation, the reason why EA's stock, amongst other things. I mean, there's several factors as to why EA's stock has jumped the way that it has recently. I do want to put out a couple of disclaimers, though, before we start off. If you're a gamer who just wants to be a little more informed about the business and the financial aspect of this industry and this hobby that you love, I think you're in the right place. I'm going to try and do it briefly and give you kind of an overview of the most recent news and feelings on EA's position. If you are, for some reason, a professional in this field and you're looking for trading advice, I think you probably already know you're in the wrong place. I am by no means any kind of stock market expert. I do not buy or sell. I do not trade on the market whatsoever. And there are dozens and dozens and probably hundreds and maybe thousands of places where you can get sound financial investment advice. This is not one of them. I just happen to really like video games, and I think if you are interested in what the future holds for your favorite game developer and your favorite game franchises, there's interesting information out there, and there is interesting insight to be gleaned from perhaps understanding the business outlook and the financial outlook for your favorite game companies. So, a stock buyback. What is that, and why would it mean EA's stock price goes up, and kind of, what does that mean in general for the company? So basically, a stock buyback is purchasing stock back from what's referred to as common stock outstanding, or CSO. And common stock outstanding is basically just the number of shares available on the market, the number of shares that anyone else can buy. So why would EA repurchase or purchase back their own stock? So there are a few reasons that EA might do this, and really the main one, the reason why I'm kind of familiar with it, is that I was initially, the idea of stock buyback was initially explained to me as essentially, the simplest way to explain it is that if you are a company purchasing back stock in your company, you're essentially reducing, as I just said, you're reducing the amount of shares available for other people to buy. So when you lower the number of shares available on the market, the remaining shares go up in value per share, essentially. So basically you're boosting, it's a way to boost earnings per share. So earnings per share is essentially net income. You subtract dividends from net income divided by common stock outstanding. EA is not a dividends yielding stock at the moment. That all you don't necessarily need to understand. Basically just you're essentially inflating the demand for the stock, you're decreasing the supply of CSO, and thus you are raising the price of the remaining stock. Now, if you're like me, you probably hear that and you think to yourself, well, why don't people just see through that? That doesn't sound entirely legitimate. It kind of sounds like a way to artificially raise your own stock price. Why is that a thing that people do, and why is it not something that other people see through immediately? So this first reason that I give, that is a reason why people do it, and people do sometimes do it, companies do it with a bit of subterfuge involved, and it can be kind of a sleight of hand. But as I've learned, most of the time, or not most of the time, again, I don't have enough experience with this to say most of the time, but it is true that a stock buyback is taken as a credible indication of a company's strength or of a positive outlook. And the reason for that is, if you're a company buying back your own stock, you're paying in money. You're giving up cash assets to buy back stocks that may fluctuate in value if your company doesn't do well. So it's not an easy bluff to pull off, so to speak. If you give up part of your cash position to purchase stocks, and then your company for lack of a more sophisticated term, still sucks. Other people are going to know that. And ultimately, even though you might artificially raise the stock price in the short term, the stock will go back down, and that is not going to be a good investment because you gave up money, you gave up cash to buy stock that ultimately, was kept going down because your company was not in a good position. So, given the fact that investors research as much as they can to learn about what companies to invest in, a company obviously has firsthand knowledge of their own position. And so, when a company gives up cash to buy stocks, it is generally taken to be a credible indication of a positive future, or at least that the company estimates that they are in a strong position for a positive future going forward. So, and some other reasons that could kind of be thrown in there. I don't think that these necessarily apply to EA, but I've also learned that in acquisitions, if you are going to, say, buy a smaller company, you can pay for part of that in cash, but also because your stock is valuable and worth something, you can also make part of that purchase through shares. You can also provide stock as a form of payment, and as a company, instead of creating more common stock, which dilutes the value by increasing the amount of CSO, you can buy back some of the shares from existing shareholders. I don't think that that's it, because on the most recent earnings call, I believe someone asked Blake Jorgensen, the CFO of EA, a question related to mergers and acquisitions, and he said, eyes and ears are always open, but there's nothing that we really feel strongly about right now. So I don't think that that's it for EA. Another thing that could come up is that, something like executive bonuses may include stock options. And as a company, again, you may want to purchase back some of that to kind of handle that compensation. But EA being, kind of they're a pretty major corporation. I kind of feel like they would have all of that pre-planned out and handled. Things do change. That, as I understand it, that is occasionally a reason for stock buyback. I would just say I don't think that that's the reason for EA. So either way, in general, reducing the number of shares tends to raise the price, either because it's a legitimate signal of strength or it's an artificial bump. Either way, I think that is probably one of the major factors in EA's stock price seeing the general bump that it did. Now, it is also worth noting that they had their fourth quarter earnings call on May 8th. I want to say it was either May 8th or May 9th. And all indications are that their earnings came in higher than what was expected. And that in and of itself has to be a major bump. I want to say that on May 12th, which is just a few days ago now, their stock hit an all-time high of $110 per share. Now, again, I'm not entirely savvy on all of the sources that maybe one should pay attention to, but in learning a little bit more about this, I did learn that, so Investor Business Daily gives a rating of how stocks compare to all other stocks, and on May 12th, which, as a side note, that is technically after the news of Bioware Montreal being scaled back came out on Kotaku, so following that, EA's stock continued to rise, and the Investor Business Daily moved EA's score up to 97, which indicates that EA stock is performing better than 97% of available stocks, which, again, I'm no expert, but that sounds really, really damn good. Now, I mentioned, some of the news about Bioware Montreal. Obviously, we're all aware now of the reception to Mass Effect Andromeda. There's also been some news, an estimate that was sent out, an estimate that was in an investor note that was sent out by Michael Pachter, who does analysis for Wedbush Securities. He's been doing estimates on sales numbers within the video games industry for a while now, if I recall, and his estimates say that Andromeda sold 2.5 million units. There were other indications given prior to launch that EA was hoping for 3 million units sold. And so at least in the initial launch window, that doesn't look like that's happened. Anyway, what I'm trying to say is all of this news, obviously the sales and the reception of Mass Effect Andromeda, not great, but specifically the news about Bioware Montreal being dispersed to Motive Studios and being redistributed to other Bioware projects, obviously that news doesn't mean that news coming out doesn't mean that Bioware Montreal being scaled back is the cause of the stock doing better. I don't see how that could possibly correlate at all. But it does mean that EA is not being slowed down by that. And they're apparently not being slowed down by the poor reception or perhaps even the slightly lackluster sales of Mass Effect Andromeda. It looks like, according to the earnings call, FIFA did very well. Battlefield did very well. Star Wars Battlefront did fairly well. And people have to remember, EA has tremendous strength in their licenses. The NFL and the Madden franchise is a massive license to hold. FIFA, Star Wars, they're going to do tremendously well on those licensed games. And also EA, as they continue to emphasize, they have a really committed strategy in digital and in live services DLC content. So the way they see it, they want their DLC to be a continuous stream of content that makes games an evolving experience. Now, how much you buy that, and we could seriously question the quality of DLC in EA games at this point. It's not always consistent, but like I mentioned in one of my earlier videos, they're very, very committed to that strategy, and their numbers, if you look at them year over year, they continue to make significant inroads into digital, and their revenue and their income continues to increase in the digital space. So clearly they know how to carry out a strategy, and they know how to stay committed to a strategy and make good on it. And it really seems to be working. EA has a strong position financially, despite all the hate they get, despite all of the criticism that they take. In particular, with us as Bioware fans, maybe you weren't necessarily satisfied with Dragon Age Inquisition. I loved it. Maybe you didn't necessarily like Mass Effect Andromeda. I also loved it, but I think it's important to note, regardless of how you felt about those games and regardless of how you feel about EA, they're in a really strong position. All the hate notwithstanding, they're doing fine. They're doing better than fine. They're actually doing great. 4 days ago, their stock price hit an all-time high. I mean, they're doing exceptionally well, and their future is not dependent on Bioware games at all. At all. They have a really strong lineup, EA does. They have a really strong portfolio of games and licenses. At this point, BioWare has to keep themselves alive. I know that sounds kind of dramatic, but they really have to keep themselves alive by making profitable games, because EA is doing well in a lot of other places, and if BioWare doesn't start to get closer to the successes that they had previously, they're going to start to make themselves stand out in a bad way against all of the other profitable lineups of games that EA has. I obviously hope that doesn't happen. I have still faith in the BioWare team and in the franchises that they've created. They have created tremendous spaces for themselves to innovate and tell amazing, impactful stories. Even if you are, maybe like me, a little bit concerned that some of the core talent that used to be at BioWare is no longer there, they've created incredible universes, and they've laid out a really remarkable canvas for storytelling and great characters, and that still exists, and they can still make great games. But they really better hurry up and get back to doing that, because EA as a whole is doing well, and I'm afraid that EA is going to start to take notice of BioWare lagging behind unless BioWare gets back to the greatness that we once all knew them for. Anyway, that's my 2 cents on it. I hope this has given you a better understanding of EA's recent stock price performance and of how the business as a whole has an impact on BioWare and the games we love. Thanks for watching. Thanks for listening. Until next time, and Masaranis.